Let's dig into Alphabet first, because it was a good set of numbers. Is this a relief rally, or is this actually signs of progress and really AI starting to work in their favor?
Well, I think there was a lot of concern when Microsoft first hit with ChatGPT, OpenAI, Bing. Is this going to start taking market share away from where Google makes its money? And so cloud, was starting to make a little money, and all of a sudden people were like, ooh, cloud's starting to make money, but is search all of a sudden going to get hit? I think we saw with what they were able to do with DeepMind and Brain, getting their Palm model, getting, the search, generative search into market, Caroline, that effectively they're going to be stable. And now you can see what happens today is people are looking at Microsoft and saying, was the first move truly giving them an advantage?
Interesting. I mean, we understand there's reports even that Sergey Brin's come back into the fold, much more helping drive the AI focus for over at Alphabet. But talk to us about market share, particularly around cloud, because it feels as though Azure is the area that everyone's slightly worried about with Microsoft. That ramp up, the double digits that we all got so used to, just cooling down a little bit. Is Alphabet taking any of that?
Well, they're taking a little bit, because you saw they had about a 28% growth this quarter. Microsoft was just a little bit less than that. And anytime that Google outpaces Microsoft, it means small bits of market share. Now, having said that, there's a law of large numbers. Azure did reveal some of its size, said about 110 billion in cloud, about half of that being Azure, I believe were the numbers they put out. So they finally revealed a little bit of what their cloud market looks like. I mean, Google's, sub 10-ish billion dollars this quarter in revenue for the cloud business. So it's still a bit smaller. And so, remember when AWS was growing, they're up to $80 billion in revenue at plus annually. These differences are hard to make up. So when you're young and you're growing fast, Caroline, having said that, I think Google has some momentum. I think their AI play is really starting to pay off. So they came in late.
Yeah.
But people are saying, well, you didn't have to be early in this case because we're seeing how quick things are catching up.
And whether they were technically late or whether they were just being more cautious about a rollout, realizing the power that they ultimately have in the overall community, their size, their scale. I'm interested in AI more broadly. It's interesting here in New York today, I think AWS is showing off its AI prowess. How much is AI going to drive cloud adoption more broadly?
Well, it's going to be significant across the board. We saw Azure and then Microsoft with Dynamics 365 roll out some pricing. Companies like SAP, companies like Salesforce, they're all saying, you want our best AI features? You're going to have to use our services in the cloud. And so different companies, like in SAP, you don't have a hyperscale cloud. So you have to use an Azure or you have to use an AWS. Salesforce, you have to use their service to get the best AI options. And we're seeing the market, we've done some recent market forecasting, Caroline, and we see this market growing by about threefold over the next 5 years.
What exact market? We're talking cloud adoption market here.
We're saying the AI market. So we see about a $60 billion market right now. Our Futurum Group forecast for 5 years out, 2027, shows almost 180 billion. This is in hardware, platforms, software. So this is a 22% or so growth rate, which is big, but for how much AI, I actually think it's going to be quite a bit bigger. And I think some of this forecast is there's still a bit of conservatism. I think people are a little bit past the hype. Are they using the services? I was using Bard like crazy. I was using GPT, and I found myself, Caroline, over the last couple of weeks to a month, almost like I'm not using them quite as much. So has the luster worn off, or now we're starting to see it applied into tools? And that's where it's going to really start to pay off in our CRM, in our search, when we're actually using these things for business and enterprise purposes.
Dan, when you're looking at modeling that out for the next 5 years, what are you using as price points? Like, we're only starting to see what a Microsoft would charge if you're going to adopt some of their overall Bing AI within the enterprise, $30 a month additional. How are you seeing companies charge for this, and how do you forecast that forward? Well,
so here's the thing. The modeling is incredibly complicated because you have the modeling of things like hardware, where we have quite a bit of clarity, whether it's an NVIDIA, Intel, AWS selling infrastructure. And then you have software, where you have companies that are kind of saying, hey, we're going to give this away. We're going to just include this because it's how we protect our moat. And then you had Salesforce that showed a really rich pricing and said, we have a ton of features across service, marketing, sales cloud, and you're going to pay a lot, but it's going to be very, very feature rich, and it's going to be incremental. I think where Microsoft has a good play here is that they're going to be able to put all these co-pilots into every part of their business, and they charge 20, 30, but remember, they have hundreds of millions of users, so even small incremental gains across their product portfolio are going to drive it north. So I think the reaction today, if I was an investor and I was looking at the reaction today, I would say it's a little bit of an overreaction, but look at how much these companies have run. And we're resetting, we're saying this AI thing was a lot of hype, it's not only hype, it is going to be real, but in the long run, the way this rebalances companies' incremental revenue is going to take a little more time to play out.
And when you looked at that 5-year forecast, when you're thinking of, what was it, 180 billion being added, does that vindicate the sort of valuation increases that we have seen so far, or do you think they've got ahead of themselves?
I think the market is early, but it's very indicative of where we're going. You can't possibly see tools like supply chain management tools, HR and hiring tools, and see how AI could help us get to the right candidate, streamline getting product into market. Everything here is about productivity gains. And when you think about productivity gains, you think about earnings increases, and you think about what the market is driven by. It's driven by, can a company make more money in the future? All these tech companies have big bets on AI, and we're seeing kind of the winners get separated. The companies that are going to lag in industries like real estate and oil and gas, that's what we're seeing from an AI use standpoint, are going to be the ones that are going to be harder to invest in. So in every field, what investors need to really be looking for is which companies are going to see these incremental and then exponential gains because they're going to be able to put AI to use.
And is it from Microsoft, from Alphabet, from Amazon that those sectors adopt from? Or is it more bespoke, focused AI tools that we're actually seeing more funding in the venture space right now?
Well, I think it's going to be partnerships. So I think you've seen Jensen Huang of NVIDIA out announcing partnerships with pretty much every tech company. You see him out in healthcare. You see him talking with financials. And then, of course, he's partnering with hyperscale cloud providers, SaaS providers. Him and Bill McDermott were on stage together at the ServiceNow event. I think there's a lot of collaboration. I do think vertical-specific AI, Caroline, is going to be tremendously opportunistic because knowing real estate, knowing retail, you're going to have to build solutions. There's too many options, too much optionality of how to build an AI solution. People are going to want it in a box, just like we wanted CRM or HR management solutions. They're not going to want to try to build it from scratch. And we've seen that change in just a couple months.